Hey everybody, in this video I'm going to try to go through a couple of different scenarios with the math on the market cycle and show you some consistency that's been happening over the past 15 years, as well as what my price prediction is for the upcoming bull run that's going to be 24, 25, 2025, and kind of how I got there. So let's kind of dig into it. What you see on the chart is really interesting. It's not a logarithmic chart. This is basically the Bitcoin index. It pretty much averages all of the different exchanges and stuff and gives you kind of one round number. This is a weekly chart, and what I want to do is I want to walk you through the interesting similarities. And so you'll see how here in these boxes that there are a couple of different things between the white lines. The white lines are the halvings. You can see down here in the blue really when that halving date was. In fact, no, you can't see it. Yeah, you're good. And so you can see this is the 2012, this is the 2016, this is the 2020, and ultimately when the peaks where you can see with your eyeballs. And so what you're looking at here, I'll use this one in the middle here as an example, is literally this was the halving in 2016. And here's kind of what the price action did from the day the halving, whatever the price was at the halving, to the absolute peak. And really kind of what happened, this ended up being a 2,831% return from the day of the halving to ultimately the day that it peaked. Now, you wouldn't have bought the bottom unless you just bought it on the halving day, which is very doable since we kind of know what those days are. But you probably didn't sell the top because that's not reality. And then once we hit the top, what happens then? Then you spend X number of days coming down. And so for that 2,831% return, it took 526 days. And then we spent 363 days on the way down, which is ultimately a drawdown of 83%, a negative 83%. Now that was the bottom. This was our absolute bottom price in this section. Interestingly, though, kind of from the day of the bottom to the next halving was 513 days to the next halving, and that whole cycle repeats itself. So here's what's fascinating. You have percentages of 9,000%, 2,000, or 2,800%. This one was 657%. This is a decreasing number, obviously. I typed that into ChatGPT and I said, hey, out of these three numbers, what would be the next number in this sequence? And it gave me all the math, and I'll show you what it came out to be in a minute. But more importantly, what I want to show you is that kind of the first cycle is obviously the weirdest one, and that's over here. And you'll notice that that isn't really, I didn't put too much happening in here because the liquidity was so low that it is not relevant to today. But this run right here that happened, this big bull run, was 367 days long. Okay, then it sold off for 400 days. So a massive gain, an 84% drawdown, and then 500 days to the next halving. This huge gain, 2,800%, way less obviously, but there's more players, more volatility, and obviously buyers and sellers are what going to kind of cause that to go down. Basically, you're getting paid for the risk that you're willing to take. So the reason you can buy Apple stock and it doesn't really move much is because the risk on that is a lot lower than something like a penny stock, which can move a substantial amount more, but you're getting paid a lot more for taking that risk, or losing a lot more for taking that risk. And so what we're doing is we're looking for similarities. And what's really fascinating, the first thing that I like to look at is the drawdowns, the red boxes right here. And the reason is because basically it's allowed us to pretty much predict the bottom kind of twice now. I was only able to do this one and this one. And I wouldn't say I predicted the bottom on this one because this one went down to like 15,000, whereas my kind of rule of thumb is the 200-day moving average and 200-week moving average, which is around $20,000 to $22,000. Anything around that line or under is just going to be a home run, as you can see. And I could put that on the chart if you wanted to, if we wanted to here in a minute. But for now, like on this one, I think we bought just under, like a few dollars under 4,000, and ultimately went down to like 3,200 or something. This, 20,000 was kind of my magic number, and we went down to 15,000. I think we can all agree that if we can get even remotely close to that range, that's really great. So again, coming back to our consistency. So our red boxes are 84% drawdown, 83% drawdown, and 77% drawdown. So what I'm telling you is that we should expect after the next high that we are going to have about a year of it coming down, and it should go 70, 80%, and that would be wonderful for us because now we know where to buy. If you can buy the bottom, you can reduce your risk a lot. On the way up, again, it is a decreasing number, and I will show you what that ultimately ends up being. But then in between the halving times, kind of what happens. It's 542 days, 513 days, and then this one ended up being 516 days. That is just insane to me that it could be that consistent. Same thing kind of in our drawdown areas, 410 days, 363 days, 376 days. It's a freaking year. If you wait 1 year from the top to buy, if literally that was your only marker, you'd be doing pretty freaking good, people. So that's kind of exciting. Definitely a big run up, definitely a big sell off, definitely a big waiting period. The difference is for the first time, we have, you can see in our waiting period here, if we go back to this one, right, we have a top and we don't break that high until after the halving. Coming back over here, same thing in this market, right? We had a big run up, we had a big sell off, but we don't actually break that high of 20,000 until after the halving. This time though, we really did. So we kind of came over here. Let me kind of bring this over. And we really had what's kind of an interesting turn of events in that we had a run up. This was actually our absolute top. And then it sold off. Here's our absolute bottom. It happened to be 516 days. What was this box for? Oh, this was just showing the range that I thought it might go down to. Because when it goes down to, it's going to find support on something. $20,000 bouncing off of this point would have been the most logical support. It's another validation for also why $20,000 would be a very solid range to buy. Obviously, it dipped under, a little fake out, not a problem. Actually, I'll just go and get rid of that because it's not a part of this conversation. What's fascinating, though, is this was 516 days to our next halving, and it went up 319%. I don't have any the percentages over here, but they're not going to be as high as obviously the other ones. We actually got to the all-time high by the halving. So what's kind of cool about this is we can actually project out here. Let me 500. There we go. Project that out. That's kind of the bottom range back over here. Not that we're going to go to it, but in March and April of 2028, that's our next halving. It's roughly every 4 years. It's actually 210,000 blocks that are mined on the Bitcoin network, on the blockchain. And so what are we looking at? We're literally looking at probably 548 days of kind of running up. I mean, at least historically, 526 days, 548 days. This one was 367 days. It was a year. I lean more towards, again, volume coming in on this one, especially volume coming in on this one. It's probably going to be 500 something days. So I kind of mapped out what would 550 days look like, and really what does that look like for a projection? Well, when you go and you look up let me see if I can actually pull that up. I'll drag it over here so you can see the math. You can see even my question. So my question is, what number comes next in this decreasing sequence of percentages? This was the first one, the second one, and this was the next one. Shows you the math step-by-step analysis, and it gives you obviously this has diminishing returns, right? If you look at these numbers, diminishing returns, 9,000, 2,600. So what would be the next one? It says 438%. So we come over here and we add in 438% over 550 days. And what does that get us to? $352,000. Now, before you say that, Brian, there's no way, that's absolutely crazy. I would encourage you to look at the size of the green boxes. And you'll notice that they are exponentially growing, right? 438% takes you right to on the money. Look at this, on the money, $352,000 to the penny. That is absolutely mind-boggling to me from the day of the halving to that all-time high. Now, when we look at this on a logarithmic chart, right, it doesn't look, now all this stuff that I wrote on there is going to be pretty freaking funky, and I apologize about that, but I can't do it both ways on the same chart. But literally you see this overarching and kind of approach. And what you do see also, if I was to remove this, oh, bummer, wrong one, is look at this, diminishing returns, just like our percentages, of course. But now all of a sudden it's not so crazy. We have our flag, we have a weird flag that's more like a square, and this one we might also have a very similar situation. But it becomes predictable, and that's the coolest part. Oh yeah, all that down there. I'll get to this. Basically, this is kind of like our low to high. It's just other ways of looking at the exact same data to try to figure out from our what our lowest low was, like here to our absolute high, what was that range, and then what would be this to this peak, and then what would be this to whatever this peak is. And again, looking for more similarities. But the cool thing about a logarithmic is 10x on the way up. So as you move up, it is exponentially more from 100,000, 320,000, a million, 3.2 million, etc. It shows you that maybe it's not so crazy that kind of Bitcoin becomes $1 million in the future. It really wouldn't be that weird at all, especially kind of as you get over here. In fact, I can't really draw a parabola, I don't think, with my skills. I know it's possible in here. I just don't got the gift because I don't play around with it that much. Sure, why not? We'll give this curve situation. So we go from here, and what is this shenanigans? All right, forget that. Rather than just embarrassing myself further, we'll skip it. But wanted to just show you logarithmically kind of what that looks like. And we'll reset our chart view and we'll come back in. And so either way you look at it, you can map them either way and they end up being the exact same. When you don't do it logarithmically, it makes it kind of bizarre. But what is 550 days away from the halving? So let me scroll in here and kind of show you that if I came to this point, and you can do this basically by looking at where's my, oh, that's right. You know what I was going to do? Oh no, I want my little orange box back. I should have hit it. I'm sorry, folks. Bear with me 1 second. Bam. All right, cool. Back to it. Some say get a video editor so that people don't realize that you're kind of a moron just clicking buttons. And I say, what's the point? Everyone kind of already knows. All right, so here we go. Kind of coming back up in here, 438%. So let me clicking on this guy. Actually, let me make it bigger. I'm trying to show you how do I'm trying to figure out how I'm supposed to show you this. If I click it. So is that right? Dadgummit. 550 days. It doesn't seem quite right. 15. Oh, because I'm on weekly. Bear with me. All right. So now you can see that this white line is the measuring point. So that's April 20th. We want to go 500 days. Oh, Brian. Boom. I was going to say it doesn't seem like far enough. 550 days would be, look there, October of 2025. Now, for those of you who followed me for any length of time, you know that I am really big on the fourth quarter of 2025 or the fourth quarter of 2020, like basically every single halving. And that's because, again, this is kind of some of the data we've extrapolated from the get-go. But it's just because I think that also what happens more often than not is we have to have enough time to have that momentum to get up to something like this. It is unreasonable and it is unstable to see this kind of a movement. To essentially literally repeat this same thing kind of over and over again would be, like insanely unstable, like to the point of 350,000 wouldn't even be an option. It would be like a million. It would just be something absolutely ridiculous. And in fact, I can actually go through here and I say that I don't have it set up on here, do I? Bummer. Well, I was going to show you I can actually copy it and paste it over itself over and over again to give you an example, and maybe I will try that really quick. Joke's on me. It is not giving me what I want. It keeps telling me that it fails, which maybe that's my whole point, is that when I try to do it mathematically, it's like, nah, bro, that's not an option. So either way, it kind of gives you an idea. I'll kind of drag this out, and I'll put some dates on there eventually. But I think it's really just fascinating. Again, what does this mean? Does this mean it's going to $352,000? Nah, that's not how it works at all. But what I will say that is fascinating, that I do really like, is that it's probably going to be in the fourth quarter of 2025, as always, and it's going to need that time to kind of get up there. And so what do I expect? Well, if I come back over and look at kind of previous history, which doesn't tell us the future, but what it does tell us is these bars, these lines are literally just visual representations of human emotion. And you know what the cool thing about human emotion is? We can count on the fact that people will continue to behave the same pretty much every day for the rest of their life. And while there may be anomalies, especially from a statistical approach, I would argue that when you're talking about the number of participants, again, statistics has the other side, which is look at the aggregate and as a whole, what do people do? And this is an international market, so it kind of makes it interesting. And so with that being said, what's interesting to me is we do see a lot of chop, right? Here was our high, here was our low, but we really kind of went sideways. Here was our high, here was our low. Will we kind of see it going sideways? My argument is that it kind of has to. I think we've kind of overbought it. A lot of it has to do with people not understanding how institutional players kind of participate. If you go back and watch some of my other videos, I talk about how they get in through using over-the-counter brokers. But at the end of the day, we probably are gonna, it really wouldn't be too crazy to kind of come back down and maybe retest some of this stuff, right? Nobody wants to see super low, but at the same time, here's your pole for your flagpole, and here's your big old flag, right? That does mean it's gonna go up, but let's draw a little bit of a diagonal here. This is so funny to even mess with right now. There you go. So in an absolute flawless, everything works perfectly type of world, this is what it would look like. In my opinion, it will look something more like, there we go. That's probably close enough. That's a ballpark. But between here and here, right, this is pretty good. Let me get to 100,000 because I think 100,000 is going to be a pretty strong emotional barrier as well as psychological barrier. And I think it's probably going to be a little closer to the beginning of the year, probably something like that. And we just see some silliness, something like that, very parabolic. Which is great. So I think we might see some sideways. We might see it come down a little bit and then finally get back up. But as you'll see in the past, let me get back over to what happens. It kind of drags and then boom, it shoots up. What happens over here? Same thing. Kind of drags. Drag. Bam. Right? Even literally back over all the way where there was really no liquidity at all. But what do we see? We see drag, bam. And so this is really the human emotion piece that we can count on. This is traders. This is liquidity. This is all the retail side of FOMO. These big runs are caused by emotional buying. It happens every single time in every market class on every type of asset. GameStop was a really great example of this. People cannot stop themselves because they realize something is asymmetric. If they could put in a little bit of money and it could radically change their life, they might as well risk it. And that's what causes these big runs. And we can count on it and we can capitalize on it. And we're not doing anything illegal. We're not doing anything crazy. And we're not even predicting the future. We are betting on the fact that people will be people. And that's a fun thing to do. It doesn't make us right every single time, but it does kind of make it interesting. And so here is my approach. Here is kind of an interesting take on it. I wouldn't say that really $350,000 is my prediction at this point, but mathematically, I think that it is at least kind of a sound prediction. I personally still think around $220,000. I can't remember the exact math on it. I'm going to actually have to dig through some files. But that was my prediction back in 2021 is that this next one would probably be around the 220,000 range. And it was based upon our growth rate of the tops. And so again, looking linearly, what does this look like to go top to top to top? What does that curve look like? So it kind of gives me an idea. The bottom line is $100,000 is pretty cool. I think that's a very set number at this point that we're going to hit $100,000. I don't know when it's going to be, but I do think that when we hit it, we will get a bounce off of it, and it will look something even like this, where it comes up, we hit $100,000. Let's say that's what this is, and I think we kind of bounce off of it up to even a 30% retracement. So it could come back down to 70 grand, which would also make sense because you see this point, you see this point, you see these points. This would act as support. It goes up, comes back down, and hits this zone right here as support, and that gives all the confirmation and confidence for us to say, sweet, let's keep moving forward. Interestingly, when you look at this, that is only like right here, right under the 550. I mean, it's absolutely crazy when you zoom in like that, how it doesn't even look like it's much at all. Where's my little drawing pin? Drawing pen. And so maybe we come up like this, and then we come back down, and then we start this blue line curve to silliness land of whatever that range is. Even this little circle range is 287,000 to 386. That's $100,000 right there. So anyway, just kind of fun projections. The cool part is price action tells us really a whole bunch. And at the end of the day, as we get closer and closer, it becomes a little bit easier. Just like kind of realizing roughly where the bottom is, we have enough algorithmic data to show us within a week or two kind of where the tops are, because you can see the momentum change. And so for those of you who follow on the Facebook, in the private Facebook group, you'll hear from me for sure. As we get closer and closer, you'll be hearing me talking about what the top looks like, what I'm looking for in the top, how much momentum there is going into it. And I don't know if it's going to be a double top, but I tell you what, if I get out anywhere up here, right, anywhere in this range, and I can rebuy down anywhere in this range, and I do that over and over again for the next 20, 30 years, it makes it really hard from a risk perspective to lose. And for me, as you know, if you followed me for any moment of time, that's what I care about: reducing my risk, ultimately increasing my returns, and focusing on building wealth. Bitcoin just happens to be a very asymmetric approach to do that, and I hope you're joining me for the journey. So I hope this is a fun little exercise to kind of give you maybe just a little bit of data and a little bit more background into how do we come up with these shenanigan ideas. This is a way to do it. Simply looking at the numbers and previous data. I lean more towards what humans have done in the past. And then I leverage the fact that Bitcoin has strong fundamentals that can't be changed. They won't be changed, but they also can't be changed. And because of that, it reduces our risk as well. So hope that was fun. If you have any questions, make some comments, and I would love to jump in and chat a little bit more. Take care of yourselves, and I don't know, buy some Bitcoin today.